Good evening, everyone, and welcome back to the Dinar Daily, your trusted source for the latest insights on global currencies and financial trends. Tonight's headline is one that's making waves across investment circles. What experts aren't telling you. The 2025 Dinar and Dong collapse. Imagine waking up tomorrow to find that two of the world's most speculated currencies, the Iraqi Dinar and the Vietnamese Dong, have just collapsed overnight. Your savings, your investments, maybe even your financial stability could be turned upside down. It sounds dramatic, but experts are warning this scenario may not be far from reality. Now, before we dive into the chaos, let's be clear. This isn't about fear-mongering. It's about understanding real economic warning signs that too many investors are ignoring. The Dinar and Dong have long been sold as get-rich-quick currencies, the idea being buy them cheap now, wait for a miraculous revaluation, and walk away a millionaire. It's an attractive dream, but the truth beneath that dream is far more complicated, and in 2025, potentially disastrous. Let's start with the Iraqi dinar. Iraq is blessed with vast oil reserves, but that wealth has not translated into a strong or stable economy. 2 decades of political instability, corruption, weak infrastructure, and heavy reliance on oil exports have made the nation's currency extremely vulnerable. More than 90% of Iraq's revenue still comes from oil. That means one dip in global oil prices or one disruption in production could send the country's finances into free fall and the dinar right along with it. When a country's budget is that dependent on a single commodity, its currency becomes fragile by design. And that fragility is showing. Recent reports in early 2025 suggest Iraq's foreign reserves dropped from roughly $105 billion to under $97 billion. That's not a small decline, that's a red flag. When reserves shrink, confidence drops. And when confidence drops, currency collapse becomes a very real risk. On top of that, Iraq recently changed its entire foreign exchange framework, ending the long-standing dollar auction system and requiring local banks to deposit dinars with foreign correspondent banks. On paper, that's about transparency. In practice, experts see it as a stress response. When financial systems shift abruptly, it's often a sign that something deeper isn't working. Now, let's turn to the Vietnamese Dong. At first glance, Vietnam looks far more stable, growing manufacturing, increasing exports, rising global relevance. But here's the catch. The Vietnamese government tightly controls its currency. They have no intention of allowing a sudden revaluation. Their economic model depends on keeping the Dong competitive for exports. A big jump in value would hurt that model and make Vietnamese goods too expensive overseas. So, if you're waiting for that overnight Dong miracle, it's time to face reality. Vietnam's policies are built to prevent that very outcome. And in 2025, the global environment is not helping. Rising interest rates in major economies are pulling investment away from developing nations. Trade tensions are up, inflation is sticky, and supply chains are unpredictable. For currencies like the Dinar and Dong, this combination is toxic. When global money tightens, investors flee from risky assets, and speculative currencies are at the top of that list. That's when things can spiral. Reserves deplete, capital exits, confidence vanishes, and within days, a currency can lose a huge chunk of its value. We've seen this before. Remember the Turkish lira crisis in 2021? It lost more than 40% of its value almost overnight, crushing purchasing power and wiping out savings. That's what a collapse looks like in real life. And that's what some analysts fear could happen to the dinar in 2025. The warning signs are stacking up. Oil prices are volatile. Reserves are falling. Fiscal deficits are widening. Debt is climbing. According to recent IMF assessments, Iraq's deficit could reach 7.6% of GDP and debt might climb to over 54% by next year. That's not stability. That's pressure building beneath the surface. Add to that the regional instability factor. Iraq doesn't exist in isolation. When nearby countries like Turkey, Iran, or Syria experience currency shocks, it spills over. Trade routes suffer, import costs rise, and capital flows get disrupted. That ripple effect can quickly turn a fragile situation into a full-blown financial crisis. Now picture yourself as an investor holding stacks of dinar or dong, convinced that one day you'll wake up to a massive revaluation. But instead, you wake up to headlines announcing a devaluation or worse, a total collapse. Your investment that once seemed promising suddenly becomes paper you can't exchange or liquidate. The dream turns into a nightmare. This is why we're not talking about a simple correction here. We're talking about the risk of collapse, a rapid, confidence-driven loss in value that can devastate economies and individuals alike. And what fuels this cycle time and time again is misinformation. For years, online forums, YouTube channels, and newsletters have promised the so-called RV, or revaluation, of these currencies. They promise 10,000% returns, stories of instant wealth, all built on speculation, not evidence. Reddit threads and investor forums are filled with people sharing stories of buying in, waiting years and seeing nothing but disappointment. Many were told to just be patient, but patience doesn't change fundamentals. A speculative promise is not a financial plan. When reality catches up, the crash can be fast and brutal. Experts today are far more cautious than the hype would have you believe. One major investment analysis firm recently said the Iraqi Dinar remains high risk with limited appreciation potential. Another report noted that the dinar's fluctuations are driven by political instability and structural weakness, not hidden revaluation opportunities. The message is consistent. The dream of sudden riches is built on shaky ground, and the fallout of a collapse would go far beyond investors. If the dinar plummets, Iraq's imports, from food to fuel to medicine, become more expensive. Inflation surges, unemployment rises, and public confidence erodes. It's not just numbers on a screen, it's real families struggling to afford daily necessities. For Vietnam, while the picture is less severe, the risk is still there. A global downturn, supply chain disruptions, or rising labor costs could push the dong lower, not higher. Investors banking on a big revaluation could instead watch their holdings depreciate. Again, hope is not an investment strategy. If you're holding these currencies, it's time to ask hard questions. Could you afford to lose most of what you've invested? If the answer is no, you may be overexposed. Experts recommend treating speculative currency investments as high risk, never more than 5% of your total portfolio. Diversification isn't just smart, it's survival. So what should you watch for in 2025? For Iraq, oil production levels, export revenues, and government budget announcements. Falling oil prices, shrinking reserves, or talk of devaluation are all red flags. For Vietnam, monitor export performance, manufacturing data, and statements from the central bank. If officials publicly reject revaluation, and they likely will, that's your cue to stay realistic. Imagine this. 5 years ago, you bought $10,000 worth of Iraqi dinar expecting a massive payout. But today, oil revenues are down, reserves are shrinking, and the government is under financial pressure. Do you hold on hoping for a miracle? Or do you face reality and protect what's left? Waiting for a fantasy can sometimes cost more than cutting your losses. At the end of the day, the story of the Dinar and the Dong isn't about which one might skyrocket, it's about which one might fall first. The signs are flashing, the risks are real, and the hype continues to mislead new investors every single day. If something sounds too good to be true, it almost always is. So protect yourself. Diversify your investments. Focus on fundamentals, not rumors. Understand that no currency, no matter how exotic or hyped, is immune to collapse. And most importantly, stay informed, stay skeptical, and stay grounded in facts. If you found this breakdown helpful, hit that like button, subscribe to the Dinar Daily, and share your thoughts below. Do you think the Dinar or Dong could really collapse in 2025? Or do you believe there's still hope for recovery? Your perspective helps build a smarter, more informed community. Thanks for tuning in to the Dinar Daily. Stay cautious, stay diversified, and as always, stay ahead of the story. I'll see you in the next video.